Hey everyone, this is Mark Treichel with another episode of With Flying Colors. This is one of my emergency podcasts, although I'm only moving this release of this item from the normal Tuesday slot to a Monday morning slot. I'm recording this on Thursday, May 7th. Yesterday, NCUA conserved Jackson Area Federal Credit Union. So that date was May 6th, which will come up in our discussion shortly. But in NCUA's press release, they say Jackson Area Federal Credit Union conserved. Accounts remain protected by the Share Insurance Fund. Member service is uninterrupted. The NCUA today placed Jackson Area Federal Credit Union in Jackson, Mississippi into conservatorship. Member services will continue while NCUA works to resolve issues affecting the credit union's operations. NCUA placed Jackson Area Federal Credit Union into conservatorship because of unsafe and unsound practices at the credit union. That is a standard canned statement because the act allows them to do that for that reason, and that's why they cite that reason. And of course, unsafe and unsound is in the eye of the beholder, but I think data shows that they were probably quite unsafe and unsound. But member deposits at Jackson Area Federal Credit Union remain protected by the NCUSIF, which has the backing of the full faith and credit of the United States. Administered by NCUA, the Share Insurance Fund insures individual accounts at Jackson Area Federal Credit Union up to $250,000, etc., etc. Member service will continue uninterrupted at Jackson Area Federal Credit Union's main office. Jackson Area's Federal Credit Union members can continue to conduct normal financial transactions, deposits and access funds, make loan payments, and use shares. The office is open from 8 to 4:30 Central. While continuing normal member service, NCUA will work to resolve issues affecting the credit union's operations. Members with questions can call this number. There are frequently asked questions posted on NCUA's website. Members with questions about their Share Insurance Fund coverage can find more information in the Share Insurance Coverage section of NCUA's mycreditunion.gov. Jackson Area Federal Credit Union is a federally insured, federally chartered credit union with 15,561 members and reported assets of $162,360,956, according to its recent call report. Jackson Area serves employees of the city of Jackson, Mississippi, as well as employees and elected or appointed officials of Hinds County, Mississippi. In the early 1990s, the credit union began expanding its field of membership and now serves 38 distinct groups, primarily composed of local government employees. Also, they are a low-income and minority depository institution, which I'll get into here shortly. If you go over to NCUA's or their website, usually what will happen is once NCUA has taken control, they'll say something on the webpage about it being under control. But just looking at their staff, I note that they did have a director of internal audit, which we'll get into, the president's SVP and chief operating officer. Odds are some or all of those folks may have been removed by NCUA because when NCUA conserves a credit union, they take out people at the top. All right, which gets me to my PowerPoint Jackson Area Federal Credit Union that I put together based on my knowledge of NCUA and how it operates. And by the way, I have zero insider information on this situation. I'm basing this on my 34 years at NCUA, my 6 years of consulting, my work as a problem case officer, my work as the staff person who was given the responsibility to conserve West Core and U.S. Central. Why was I given that responsibility? Because up until that point in time, I had conducted the biggest conservatorship at NCUA. So I know a lot about how conservatorships work, why you conserve, when you conserve, et cetera, and all of this intuition. The Malcolm Gladwell had a book called Blink, right, where your brain, after you take the journey that you take during life, is like a camera and a computer, and you see things and you instantly know things. And that's really kind of a lot of intuition here. So, and you see, I have on this first screen, why did NCUA conserve? Most likely due to fraud. And so I'm going to say alleged fraud. I'm going to say possible fraud. Anytime I mention the word fraud here, I have no evidence of fraud, but there is some guns that are smoking that lead me to think that this is probably fraud. Who did it? I don't know. Somebody internal, probably. And we'll get to that. So we've got the charter number here. Assets. I built this PowerPoint based on end of year data, which was December 2025, at which point in time they showed $162.4 million. They were conserved yesterday, or you'll be seeing this Monday. They were conserved last Wednesday. Typically, NCUA does conservatorships on Friday, although they've kind of gotten out of that rhythm. When I was conserving credit unions, I always liked to have the weekend. And my team members, Steve and Todd, who have worked on conservatorships, also would prefer to do Friday because you never know what's going to happen the day you take over. And the weekend helps you do a lot of digging before you have to come out the next day, talk to NCUA staff, the board, NCUA board, or talk to members. It just, to me, works a little bit better to do that. So for some reason, they decided to do it on a Wednesday. And they did it right after they filed a call report, which I'll get into. But NCUA, the March call report shows only $143 million in assets, and there was some runoff in some non-member deposits, allegedly. All right, that's level setting. I believe that fraud was involved, and we'll get into why I believe that. All right, so what is a conservatorship? As a reminder, NCUA's authority to conserve comes from the Federal Credit Union Act. If you're watching on YouTube, you see more details here. But I'll try and speak this in a way that it doesn't matter if you're watching or listening. So conservatorship is the involuntary appointment of NCUA as a conservator of the federally insured credit union. NCUA assumes all rights, powers, and duties of the credit union members, directors, officers, and committees. The credit union remains open and continues to serve members, but operational and financial decisions move under NCUA control. So the NCUA regional director becomes the board, becomes the conservator. They appoint sub-agents to the conservator, and those would be the people on site who would take action. And essentially, NCUA represents the insurance fund on one side, and they represent the members on the other side, and they have to act in a way that's consistent with both. But in the end, tie goes to the runner, and it's all about the insurance fund. So in a conservatorship, the credit union stays open. The NCUA has operational control, and they can do a couple different things. They could return it to the members at some point in time, and they would have to pick a board that would serve, and they would have to train that board, et cetera, et cetera. And I don't have a number off the top of my head, but it's less than 20%, less than 10% probably of conservatorships that actually go back to the membership. The other options are a merger or an involuntary liquidation. And sometimes you'll see that when they can make sure that the assets are the assets and the liabilities are the liabilities. They clean certain things up. They'll bring bidders in to take over the credit union. And that's still a possibility that the field of membership will be served, but I think it's highly unlikely that this gets returned to the members. I think it's highly unlikely that it's merged. I believe it'll be liquidated sometime between now and the next time they have to file a call report. But I could be wrong. But again, that's my intuition here. All right, so an unusual profile for regulatory intervention. Why is it unusual? The credit union was reporting 9.2% net worth at the end of the year. You don't conserve someone who actually has 9.2% of net worth unless there's a lot of things going on underneath. But the most likely situation is that net worth is not real, right? And so there's some other stats that are weird. Their loan to assets at the end of the year was only 27.8%. So there's not a lot of lending going on. They had 66% of their assets reported as cash in other financial institutions, and not the corporate, based on a quick glance at the call report. So I'm guessing these were local banks or were certificates of deposits that may possibly not have existed. We'll see. And 25.7% of deposits were non-member deposits, and they came up recently over the last several years. They started getting into non-member deposits, and that's in the 99.9th percentile. So ask yourself, why do you have non-member deposits when you don't have loan growth on the other side? It's very odd to have just under 30% loan to assets and have such a high non-member deposits. What did they need those deposits for? To park it in cash at a low rate? It just doesn't make sense. So So the bottom line is that the reported financials exhibit multiple patterns consistent with potential fraud rather than operational failure. Real money came in through non-member deposits. The asset side claims it was parked in cash at other institution. The income statement we'll see makes it look like maybe that cash wasn't actually earning a return anywhere, which is another outlier type situation. So 41.8 million in non-member deposit funding is possible fraud, possible phantom cash. But at the end of 2021, their loan to assets were as high as they've been over that period at 36%. And they had cash of 50 million and they had no non-member deposits. December 2022, very similar data. Loan to assets 36%, no non-member deposits. December 2023, non-member deposits up to 12.5 million. Cash went up to 70 million. Loan to assets stayed about the same. December 2024, another $13 million went out in non-member deposits and cash went up to a corresponding 13 million. Loan to assets down to 33%. September 2025, another 10 million went out in non-member deposits and cash went up 16 million. And loans stayed down at the 45 million mark and loan to assets was at 30%. And then December 2025, the last call report filed by the credit union staff, non-member deposits had increased to 41.8 million and cash on deposits was up to 108 million and loan to assets reduced to the aforementioned 28%. So loans really essentially went nowhere, up 7 million, and they took out $42 million in non-member deposits for some reason to park it in cash, apparently. So cash on deposits, 66% of total assets. A credit union with $45 million in loans, $22 million in investments, and 15,000 members has no business reason to hold 108 million in cash at correspondent banks. Now that's where they reported it. What were they saying to the examiners? I don't know. Was it sitting in a cash account, a checking account that didn't earn money? I don't know. Was it not where it said? Did they have fake bank statements? So income also does not support the reported asset base. To me, a tell is the 2025 yield on earning assets, 2.61% is in the 16th percentile nationally. 4.55 million of interest and dividend income reported on 174 million of earning assets when the national median is 3.56%. So they're earning 90 basis points less. If that cash is not in the bank, not earning money, like it was stolen, allegedly, possibly, maybe, that would be a reason for the yield to look low. That's one way in postmortems you can look and say, hey, this was a red flag. It's possibly a red flag. I believe that this might be what happened here. Let's do a little reverse engineering. The reported cash, scenario one, the reported cash is real, 108 million. Earning assets of 174 million, the aforementioned yield of 2.61%. Their national percentile is they're in the 16th percentile of earners. If real cash is $60 million less, this slide shows, without getting overly complicated, this slide shows that from what they were reporting in cash and what they were reporting on income, things didn't seem to line up, and that could be a red flag. The credit unions producing income like $107 to $127 million institution, as opposed to a $162 million institution, which means there's a gap of 47 to 67 million, possibly, maybe, I don't know. That could be phantom cash. Could be. Not saying it is, saying that they conserve for some reason. You don't conserve someone if their net worth is at 9% and everything's being operationally sound. They don't have a lot of loans. That's probably not where the issue is. My guess is that if there's fraud here, it's in the cash and or in unrecorded liabilities, which we'll get into. I have a possibly fabricated 2.13 net worth entry. So in the fourth quarter, they had a 2.13 million net worth entry, and net worth went up 2.7 million. Well, their actual income for the fourth quarter was reported at only 42,000. And the net effect looks to be about a $2 million unaccounted for income. Now, I did a search. I tried to see if they had ESIP monies or grants, and obviously that was previous to that. So that they showed no income tied to the ESIP program from several years ago, and they wouldn't have wanted to record that in the fourth quarter. But I was just trying to look at, okay, what could explain that? I could not find any CDFI funds, grants that would equate to. And if there were grants from NCUA, they're capped at a much lower level. So it's probably not that. This entry actually increased their net worth above the well-capitalized area, and maybe it was something they booked to keep NCUA happy with their capital. So peer outlier status and capital erosion. On the right here on the chart, 2021, 11.8% capital. 2022, end of year, 12%, 2023, 10.5%, 2024, 9.5%, September, 8%, approaching PCA, and in December, it jumped back up to 9.2% with a recognition of income that does not appear to have made sense. So also, they are one credit union of any substantial size out of 4,374 who have this statistic. Non-member deposits greater than 25% and loan to assets less than 30%. There are only 6 credit unions in the country that fit that have non-member deposits of more than 25% of assets and loan to assets of less than 30%. 6 credit unions in the country that have that. The other 5 are all under 3.2 million. So there's only one large credit union out of the whole pool of credit unions that fits that profile. Again, earlier, I said, why would you have non-member deposits when you don't have any loans? Why would you have non-member deposits and only park it in cash? Something just doesn't make sense relative to that. And I'm not saying NCUA should have caught that. I am saying that that'll be looked at if there's a postmortem and if there's a material loss tied to this. But that caught my eye. When I first looked at the FPR, saw no loans and saw non-member deposits, that's what stuck in my head as a likely odd situation. All right, so fraud can occur on both sides of the balance sheet. Did it? I don't know. Fictitious assets on one side, unbooked liabilities on the other. Either alone can hide losses. So on the fictitious asset size, is it in loans? I don't know. Are there any? I don't know. It could be that everything's going to be fine and this will be returned to the members. But you don't take someone over with 9% net worth if that 9% net worth is real. So reported $107 million in cash. Quite possibly that's not there. Unbooked liabilities. Some of NCUA's biggest losses, and actually there was an IG report from, I believe, the FDIC that talked about a $50 million bank that was actually twice the size because they had 2 sets of books and records. Oftentimes when a conservatorship happens and there are losses, there will be people who will come in and say, hey, I have a share certificate here. And you look on the books and it's not on there. And then you discover that there's a second set of books and records. So the data isn't saying that this is what happened. The data kind of, to me, points more to the asset side. But with non-member deposits coming in, maybe there were unbooked liabilities that somehow somebody at the credit union became aware of, and the person who was in charge of possibly committing this fraud, if indeed fraud happened, somehow was discovered and they had to change their MO. That's possibly what happened. Sometimes, fraud gets caught when someone is sick, right? You always want to build in somebody having to take vacation. If you have somebody who doesn't ever leave because they need to keep, need to keep juggling the balls. And if you have 2 sets of books, you definitely have to be there to say, hey, yeah, we have your certificate over here. Come see me. So what triggered NCUA to act? Time will tell. Time will tell. Another thing that happens is when NCUA, if and when this turns into a loss, the Inspector General has to do a material loss review under 2 scenarios. If the loss is more than 25 million, or if the loss is 10% of the assets of the credit union. And of course, you don't know what the assets are right now, right? And I'll explain why I'm saying you don't know what the assets are right now. And the greater of those 2 numbers triggers that review. and that will look at what happened, what were the root causes of the failure, when NCUA became aware of the conditions and what they did, and whether supervisory actions were timely and appropriate. And when an IG does a material loss review, they come to conclusions. And they say, we believe X, Y, and Z happened. We believe NCUA needs to change their policies in this manner. And then the Office of the Executive Director has to come to an agreement with the Inspector General and make a commitment to that. So long term, if this was a big loss, what I could see is if and when there's a new board, that they look at the restructure that happened at NCUA, and if it's a Democrat in particular, and they'll use this material loss review, again, if one materializes, to say, hey, we need more examiners, or we need to do more of these exam steps. And because we need to do these exam steps, we need to hire more people. So that pendulum could swing. And when pendulum swings, it's going to be when there's a new board, or a Democratic board, or a loss of such significance that NCUA says, hey, you know what, we need to do more in this area. So that's a long-term projection into 2028. And obviously we'll know before then if this credit union gets returned to the membership. My intuition will have been wrong. If they end up liquidating this between now and the end of the next quarter, it may be right. And as we start to see, and these material loss reviews do become public, it'll take a while for that to happen. And by the way, I have recorded another podcast that looks at the semi-annual report to Congress for NCUA's Inspector General. And there were 7 losses that I talked about in that podcast, which I guess I'll slot to move up to next week in light of me talking so much about fraud here. But I talked about those losses, which ones were tied to fraud, what it meant, the fraud triangle, opportunity, motive, et cetera, all those things. So that one will follow next Tuesday. And I'm going to, every 6 months, take a look at that and do a podcast on the Inspector General report from NCUA and also the other banking regulators, although I have not recorded that one yet. In researching this, I did some analysis of the data from December 2025 and back to come up with some of those stats. And then I downloaded the call report from the end of the year, and I downloaded the call report from March. And in scanning through that, I noticed that the call report from the end of the year was signed by the CEO. The call report from March 31st was signed on May 5th as an estimate, and it was signed by an NCUA employee. And it said the person's name, which I'm not going to say here, and then it said estimated call report. What happens is NCUA needs to get all the data up, right? There's always stragglers. NCUA, if you file late, will assess civil money penalties. Sometimes, if NCUA has already conserved a credit union, NCUA has to file it for the credit union, or they'll have staff do it, and staff that they've retained at the credit union will do it. But in this instance, it doesn't say that it's an NCUA employee, but I looked the person's name up and saw on LinkedIn that they are an NCUA employee. I thought it might have been the number 2. That's what I was expecting to see, but then I saw it was NCUA and the light bulb went on, right? So May 5th, they file an estimated call report and they say that it's estimated. Why do they say it's estimated? Because they don't know. They know that it's not right. They may know a lot, they may know a little, but they know that it's estimated and they wanted to put that in there. Somebody at a higher level said, well, just put estimated. We need to get the data in there. And then the next day they announced that they conserved the credit union. That may be why they conserved it the next day. They wanted to get the call report up and up and running. Now, earlier I mentioned, when I started off, I mentioned that the press release said that they had estimated assets of X. I looked at the last several press releases on conservatorships. They don't always say estimated assets. They say it in some instances, and I think that may be a tell that they know there's fraud here. Instead of just saying assets of X, they said estimated assets of X, and they cited the end of the year. So it's not the one the NCUA employee filed. It's the one the credit union filed. Very interesting indeed. So now what happens? NCUA operates Jackson Area Federal Credit Union to determine resolution. They'll be verifying assets. They'll be having public outreach as members come in. The worst case scenario is members come in that you don't even know are members, and they're saying, I have a deposit here. I'm not saying that is going to happen, but that does happen in an occasional conservatorship. It does happen in frauds. It did happen at that bank I referred to, and it's happened in some of NCUA's biggest losses that they've had. Because again, the best way to fool NCUA is to have a whole second set of books. When somebody comes in, they have a deposit, but it's just not on the books and records. Although with cash being so high, that may not be the case here. It may just be that there were assets that don't exist, and the theft was of money that came in that is on the books. Hopefully that's the case. Hopefully it's not on the asset side and the liability side, but I wouldn't be surprised if it is both. So 5 lessons from Jackson Area Federal Credit Union. Healthy ratios are not safety. Okay, 9.2% net worth, hardly any loans to assets. What's the real risk here? The real risk might be that there was fraud involved. The income statement can tell you the truth sometimes. Phantom assets earning nothing. Where's the yield that would correspond to that level of assets? Non-member deposits without lending. Is it a red flag? Maybe it should be. Equity entries without income demand scrutiny. Maybe that's what triggered it, but that was like a snake eating a rhinoceros when you saw that number flowing through the financial statement. And maybe that's phantom equity, maybe it's not, but it seemed odd. And then lastly, NCUA exams are not fraud audits. I'm not doing this podcast to be critical of NCUA. Whenever I was at NCUA and I heard that there was a big fraud in another area, I knew that it was not that I was doing better than the other area. It was just the reality of fraud happens. Now, there will be, in my opinion, if this turns out to be a big fraud loss, there'll be some soul searching at NCUA on what they can do better. There'll be criticism from the trades. There'll be criticism from the press. And again, NCUA is not a fraud auditor. The supervisory committee exists to look at that. CPA audits exist to look at that. And even those are not fraud audits. So in any event, very interesting times. Conservatorships get my blood flowing if you can't tell. As we learn more publicly, which may take a while, I will report more here, unless, of course, it was so bad that they liquidated it over the weekend, which I guess would be one reason why you would take it over on Wednesday if you knew you were going to close it on Friday. Not saying that's going to happen. If that happens, and I hear about it, I will publish this one immediately, and I won't wait until Monday. And I'll probably drop in a front end saying, hey, I moved this up because NCUA liquidated. But I doubt that will happen. I think they'll be there for a month or two cleaning up this mess. All right, I'm going to click stop sharing my screen. We're back to the main screen here. Everyone, as always, I appreciate you listening. I appreciate you watching. This is Mark Treichel signing off with flying colors.